The last maybe 10 to 15 years, Latin America has embarked on a new phase of accelerated wealth creation. We have a history of a lot of capital flight, but now a lot of that money has stayed locally and created, investment booms that have made the economies more efficient. Currencies have stabilized, and I think overall you have a very good growth cycle that is second in the world only to Asia. Of course, Latin America is not just one place. It has a lot of differences from country to country. You have the typical stabilized countries for a longer time, like Chile. It's a small but very stable, very well managed. You have, smaller countries besides Chile, like Peru and Colombia, well managed. Macroeconomics very sound, and a lot of incentive for the private sector, which have been booming for a very long time. You have more complicated countries like Argentina and Venezuela, where we still see a lot of the wealth created in the few dynamic sectors being taken out and, onto global markets. And you have the two big whales, which are Mexico and Brazil. Mexico very much driven by the import demands of the U.S. It exports 80%, 85% of what it produces to the U.S. More local investments than in the past before NAFTA. And Brazil basically has a very large internal market. Its growth has been financed to a large extent by the boom in export commodities to China. So Brazil has, in a way, benefits from two kind of models: a very strong internal market and the commodities boom to Asia. Up to the 90s, Brazil had, a very important inflationary process. We had 530 banks. We have about 100 today. So there's a huge consolidation with the end of inflation. Itaú benefited from that, acquiring, dozens of banks and gaining scale, which in a big country is the name of the game. It has the most important financial franchise in Brazil, and on top of that, it has always been the most international of Brazilian banks, even during the crisis period, because it always wanted to tap international markets, by having presence in Europe and in the U.S. We have a tradition of having a lot of institutional investors, like BlackRock, like many important institutional investors. The consolidation of our presence in Brazil required that we think, where do we go next? And of course, Latin America is the obvious choice. What we're trying to do is basically create a Latin American franchise, because Latin America is very polarized between two big markets, Mexico and Brazil. So we need to basically try to build that presence around one of those big markets. Since our home market is Brazil, out of Brazil we'll build, South America, and eventually we'll get to Mexico. But I think that is the strategy over the longer term. We have always been in very good relationship with all the regulators. We are subject to the Fed, to the central banks of Argentina, Uruguay, Paraguay, Chile, to the European Central Bank, now the Bank of England, the FSA. I think that what banks need to do is be very transparent. I'm involved with, we're just opening a bank in Switzerland, I go to the regulators before they call me and say, listen, we're going to do this, we're going to change this system, we're migrating these accounts. And sometimes I get a little surprised, but I think that this is important, because you have to build on, you build your credibility. And credibility is like a very, very rare overdraft that you basically check against. And I think that because we come from a region that has been more unstable historically, much less now, I think that we have learned to steer, very carefully between the, longer-term interest of society, your clients, an environment that changes in terms of regulations. That is less now because the Latin America is much more stable. But we have been dealing with very complicated risk situations for a very, very, very long time. I always tell my, my colleagues and the people I interact, you can't have a global bank made only by Brazilians, because you are as global as your people are. So we are really trying to bring, people from different origins and experiences to Itaú. And the business that I take care of, in Miami we have 20 nationalities. Of course, it's easier to do that in Miami than to do that in Buenos Aires, perhaps, or Santiago. But we have a clear, well-defined plan to bring on board people, with different experiences where nationality should not be an issue. Having said that, language is a fact, okay? And in the international areas of the bank, including my own, we try to conduct as much as possible all of the communication in English. I would say that in my specific area that may be around 70–80%, but that's not the rule yet. That is the exception. I would say that for Latin Americans overall, being Spanish so close to Portuguese, I would say that you can develop really good working capabilities in Portuguese if you speak Spanish or maybe French or Italian in a few months. Of course, if you speak Russian or if you speak Japanese, it's more complicated. But I would say that over time, the question of language tends to be less important, especially in the international business of the bank.